Morning, everybody. Mike Vacchi, Princetontrader.com, here for ntmarkets.com with your Thursday morning pre-market webcast. Okay, we talked on Monday morning about how we had punched the upper Bollinger Band, how we breached that band, traded back inside, and that we were essentially going to be in a news vacuum from Monday through Thursday morning at 8:30. So it's 7:15 a.m. Eastern Time as I'm taping this. We've got jobless claims in an hour and 15 minutes. That's literally the first piece of economic news we've gotten all week. And in the absence of news, in a vacuum, this market trades higher. And that's exactly what it did. And we talked about it riding the upper Bollinger Band, and that's what it's done now for 3 days. Yesterday, in my opinion, was a fairly strong day simply because it jumped over my upper level that I use with my subscribers. Didn't fade at all. It just jumped the level and converted it and continued to move higher. There was really no give back there. So it was a fairly strong day. At the same time, I would say, we were up about 0.5%, 0.6% yesterday. Felt to everybody like we were up 3%. And that's an indication psychologically that we might be getting a little bit tired, but there's no reason for you to expect anything but this market continuing to reach for that upper Bollinger Band. The only thing that's going to change my mind is when the market takes out the previous day's low. In this case, 1617. If we can trade below 1617 today, then you can start to see how the chart has the potential to pull back a little bit. And I think, of course we're due for a pullback. I mean, we were trading 1580 on Thursday. We're now trading, 16. Our high print in the overnight was 1631. So that, we've done 51 handles in a week. So that's, that's significant. At the same time, you've seen the market do this time and time again. And until that previous day's low is breached, there's really no reason for you to change your game plan of looking for a morning dip to grab and looking for it to reach that upper band. Okay, and on that and with that dip level, I mean you can't just blind buy it and hold it. That's crazy. If you decided that you want to go into the day and you want to look for a dip to buy, looking for continued strength, that's fine. But you've got to establish a stop underneath that dip. Don't get caught in the game of, well, if this isn't the dip, then the next dip will be the dip. I'll add there, it'll bail me out. And then that dip doesn't pan out. And that dip doesn't pan out. Then you end up being the one holding the bag. And you don't want to be that guy. Because when this does turn, the dynamic that will be played out is dip buyers will come in, they'll get chased out. They'll come back in, they get chased out, they come back in, they get chased out. That's all that's been happening the last 3 days on the other side. Top callers come in, they get chased out. Come in, chased out, come in, chased out. They cover, they squeeze them a little higher. So just understand that if your dip buying strategy doesn't work out, after getting stopped out once, certainly after getting stopped out twice, my recommendation would be to step aside and see what the market's going to do, because that may be the day that we turn. Okay, everybody have a fantastic day. Mike Vacchi, Princetontrader.com for ntmarkets.com. I'll be back tomorrow morning with another webcast. Trade them well, everybody.